We are long Euro Australian dollar today. We bought Euro Aussie and we are risk free on this trade. Stop losses at break even, and we are already up on this move, 70 plus pips in profit. And in today's video, I'm going to give you the smart money forex trading cheat codes so that you can trade the forex markets in line with the banks.
Batman, Batman, Batman. Batman, Batman, Batman.
The main thing you need to understand when it comes to trading the forex market is that in order for the smart money to fulfill their ultimate objectives, what they need is they need the retail traders to take the opposite side of their trades. Now obviously the smart money don't want you to know their ultimate true intentions, because if you knew what the banks and the smart money's true intentions were, then you would never be willing to take the opposite side of the trade. So they need to use tactics in order to induce retail traders to be willing to take the opposite side of their trades, which is why as a smart trader, you want to be trading using supply and demand and forex volumes, using these tools so that you can identify levels where with high probability the smart money have induced the amateur retail traders to be willing to take the opposite side of the trade, which is exactly what happened in this setup over here, which happens constantly in the forex market. And I've done a lot of videos on the setup. What you can do is you can simply watch the playlist, which is linked in the description below. But what we have over here is we have two levels here. We've got a demand level over here, demand level number 1, as well as another demand level here at the bottom. And whenever price comes down to test a demand level, we as smart traders want to start looking for buying opportunities. Now, why do we want to be buying as smart traders at the demand level? Because we need to simply look at what has price done before it has reached this level of demand. And as you can see here, before price came down to test this demand level, we can see that price was actually moving down significantly in the market. Now, what this shows us here is that there was a high probability here that the amateur retail traders were induced to take selling trades. As I zoom in over here, so before the setup actually even happened, let's just look at this move here. We can see here price has been moving down significantly. The market is in a downtrend, and we know that whenever retail traders look at the market like this, they are highly likely induced to be selling, because obviously what do they want to do? They want to follow the overall direction of the market and they want to trade in line with the trend. And this is exactly what the smart money wants the amateur retail traders to do, because they need willing sellers. And now that they do have willing sellers that are placing sell trades in the market at the moment, what do you think the smart money is getting ready to do? They're getting ready to buy. So as smart traders, when the amateur retail traders are getting ready to sell, we do not want to be selling, because we don't want to trade opposite to the smart money. We want to trade like smart traders and follow the smart money. So we want to start getting ready to buy. So what we had here is price came down to test our demand level, and as price came down to test the demand level, we can see that it started to consolidate at this level and started to move in a range. And we know that whenever price starts to move in a range, the longer the range, the higher the probability there is of a breakout from this range. Now as a smart trader, when you trade with supply and demand and forex volume, then you have a higher probability of trading the breakout in the correct direction, because you are trading like a smart trader and following the smart money. So this was a classic setup over here, price consolidating at our demand level number 1, our first level of demand. And then actually what happened to induce more retail sellers, which is another tactic the banks use over here, is that price was moving in a range, and then eventually we saw here a big spike down from the first level of demand down to the second level of demand. Now you need to remember here that at some point this big candle here was actually looking like a seller's candle, and not only was it a seller's candle, it was a seller's candle that broke the range that price was in for this period of time. So what do retail traders see? They see that eventually price is broken out of that range, so now they are adding more selling positions to their trades. And those that were not sure when price was consolidating saw these big breakouts from the range, and those traders that were on the fence were now convinced to start selling. But because we know that price was coming down to test the demand level, as smart traders we were still getting ready to buy. And as you can see there, price came down, tested the second level of demand, and as the amateur retail traders were selling, we were getting ready to buy, and skibbity pap, spiked down to the second demand level, and then reversed back to the upside, and now we are long, we are in profit on this move. Stop losses at break even, and we are risk free in this move, simply trying to milk for as many pips as we can. So now that price is
Aweh Millionaire. If you enjoyed the video, leave a like, comment, and subscribe, and hit that bell.
Batman, Batman, Batman.